Good afternoon, folks. All right, this is going to be a rather brief analysis video. We had something pop up, kind of like a personal emergency here. One of our pets, Bella, something's wrong with her, so we have to take her to the vet in a short period of time. So we have a little bit of time, and I don't know what I'm going to be able to do tonight or tomorrow. So I'm just going to put what I can here, and I will touch base with you again on Monday. All right, so this is economic calendar coming up for this week. We have core retail sales for dollar index, manufacturing PMI, and then we have a high impact Canadian bank speaker at 2:55 p.m. Tuesday, we have core durable goods for New York session, and on Wednesday, we have PMI for GBP and employment change for $8:15 a.m. and 10 a.m. ISM non-manufacturing PMI. On Thursday, we have a monetary policy meeting accounts medium impact for New York session for Euro. And for Canadian dollar, we have the PMI number at 10 a.m. Thursday. On Friday, it's the circus ride that we look forward to avoiding every first week or so of the new month, non-farm payroll. So it'll be expectation only, not speculating on non-farm payroll Friday. So what does it mean for our week? Obviously, we're rolling into a new month, and with non-farm payroll Friday, the best trade scenarios are going to be on Monday, Tuesday, and up to Wednesday's New York Open. After that, everything becomes a crapshoot. All right, so real quick, with the new month, I waited to start a new month here. I'm looking at IC markets. Okay, IC, letter I, letter C, markets.com. And their MT4 platform has the bond market, and it carries a slightly different perspective on the dollar index that you're probably used to. They deliver the data via the futures contract. So this is the standard dollar index we've been using for the last couple months with the AVA demo. And if you look at the IC markets, that's what this is here, and it's the dollar index futures. So the symbol's different, DXY, and June contract month, M, delivery month, and then 9, I guess assuming 2019. So there's some notable differences here, and I'm going to use this real quick to answer some of the emails I got. So when you don't get a response that was very close to this, just know that I had you in mind with reference to this topic. So the concern's going to be, like, for instance, like this high here and this high here. Well, this high on March 7th is slightly lower on this versus the higher high, obviously, on the AVA demo. And if you look at the spectrum that's available with using dollar index data, the question's always, this is what my broker provides me. Should I use this or should I use that? I personally believe that as long as you're trading with the higher time frame institutional order flow, it's going to have very little impact. Now, what's going to affect your issues are going to be in how far the market will move in that direction. And a case in point would be like we see here, the lower high here, whereas on AVA we have a higher high. So if we're concerned about only trading in higher time frame order flow, it will remove most of the issue. But there's always going to be some discrepancies because that's this business. Okay, it's not like a stock price is finite. This is what the high was, this is what the low was, the opened here and it closed here. Futures contracts, same thing. If you look at the open, high, low, and close, it's pretty much, as close as you're going to get it. Forex, this is the reason why a lot of folks are afraid of it, because there's going to be a spread variance between highs and lows, and it's always going to be relative to their in-house liquidity pool. For instance, if your broker in these highs here, if it looks similar to this with a lower high here, great. But don't be upset or alarmed if you see a higher high there, because obviously what goes above that previous high. It's going to be stops. So the broker is executing its permission that you've given it, okay, to open the spread to take its own in-house liquidity. So when a broker has a liquidity pool of clients, they can cannibalize them, and that's the reason why there's such a high turnover in this industry, because that's what goes on. So you can get upset, you can get fearful of it, or you can just say this is the way it is, and as long as I'm trading in higher time frame order flow, I'm going to be doing the same thing anyway. I'm expecting the highs to get swept to reach for that liquidity. Okay, so that's one of the things that the new students, when they come in contact with me, they get nervous about it. Either it's going to stop working because I've taught it, or their brokers don't match it with my charts. Okay, and that's why I avoid the whole broker thing, because number one, I'm not trying to bring you to any one particular broker. That's not my forte. It's not my business model. I'm not trying to get into relationships with brokers. That's a problem in itself. So I give you all the responsibility, as it should be, to determine what broker you're going to trade with. But as long as we're trading in the mentorship, it's always demo, and I always advise you to use the same perspective that I use. And for right now, simply because the bonds, they stopped delivering that for AVA, and also they have this weird gap in their data for the dollar index, and it irks me. So between those two things, and we also there was 2 times where it had a hiccup in data. I'm not sure if you had the issues with it or not, but personally I've seen issues with it. And also it expires on me, and I don't know why, but they kill my demo account. It only lasts for a little while, then it's okay, your stuff expires. I'm told, and I'm hoping this is true, IC Markets, their demo doesn't expire, which is useful in our purposes, because it allows us to work with the same account, and you can see where your periods of growth are and where your areas of additional information and study will be useful. So I just want to put that out there, let you know that there's going to be some discrepancies between your price that your broker has. And I've always said this. I said this back when I was just coming out on the scene as a Forex guru on baby pips back in 2009, 2010, that if we get upset and start worrying about the infinite possibilities of what daily highs and lows are going to be, you're going to go nuts, and you're going to scare yourself right out of the opportunities that's available. So forget that for right now. You're not even supposed to be talking about a live account. And if you're talking to me or asking me emails about your live account and you just started the mentorship, you're already screwing up, because I'm not teaching you how to trade with live funds here. I'm teaching you how to read price. Okay, if you understand how to read price, all those decisions that you'll make on your own about trading live, you'll know when and how. But for legality reasons, I stay in the context of a demo. And if we're all looking at the same demo and the same delivery of price, when I'm expecting certain things to occur, or if I'm teaching on a specific concept, it should be seen across everyone's charts inside the mentorship. So there shouldn't be any kind of, well, it doesn't match, it doesn't this, it doesn't that. It's not going to. It never will. That's always been the issue with Forex, because the broker has the ability and the liberty of opening its individual spread within reason. It used to be crazy, but now regulation has stepped in, as it should have, and allowed them to only work within a reasonable scope of operation. doesn't change the fact that they're still going to cannibalize you if they can. So it's important that we always trade in a higher time frame institutional order flow, because then it's unlikely to be as gross as it can be if you're trading against it. All right, so with that said, the volume imbalance that is seen here on AVA, we don't have that here on the futures contract for the dollar, but we do have equal highs here. So the same context is we're looking for a slightly run higher on dollar, but because of that, also we're going to take our attention back to these equal highs. It looks certainly like it wants to go and run into the 97s, and we're really close to it anyway. So this may be one of those instances where the seasonal tendency, while it is very historically accurate, we may have only seen it do this little dip. Okay, and that's it. So in line with what's being shown here on the daily chart, if I go out to a weekly, we have that imbalance still, like we've been talking about for months. That may be the upside draw on the dollar. And then we have this area in here. I think that the volume imbalance that's shown here is interesting enough to, if we get through this, in other words, if we get a prolonged, sustained upside run on dollar, and we close this in, they may want to come back down and find some support in here. Maybe it'd be better if they didn't come all the way back down into this high and leave some kind of a gap, and then maybe run up into here. So I think that may be the upside once we get through this area, if we get it at all. Okay, it may not even get there, but if we see a sustained run on dollar index, I have to be willing to concede and allow that to be what's happening right now, versus this is the seasonal tendency, this is what I think is going to happen, and this is all we're going to wait for. Okay, this is the part of trading that makes it difficult, because tools suggest one thing, but price is going to do another. So we can either arm wrestle the marketplace, or we can say, okay, I'm probably incorrect about my assumptions about what price may be doing in the coming 3 to 6 months. So with that flexibility, it allows us to get in line with order flow that's occurring right now. And it looks as if it wants to go higher. So if we have a bullish prognosis on price, all we have to do is start looking, where's the liquidity at? Is it going to be an internal range liquidity, or is it going to be external range? And right now, everything points to external range, which takes us back to these equal highs here. Okay, so notice how much time we've been spending without running that, without really seriously breaking down. Again, consolidation. That's very, very frustrating, and it's not so bad when you're a day trader and scalper, because it's not imperative to be, right on the long-term direction. It's helpful, but you don't need to use that to trade volatility. Because of the sustained move from 2018, we've consolidated in here, so we may be continuing up. Now, here's the interesting thing. If we press through that secondary portion of price action on the weekly, say we got through here, this could just be the middle point of a price move that may be still yet to unfold into 104s, 105s, 107s even. And again, that's assuming a lot right now. But from a macro long-term perspective, I mentioned all this stuff back here in 2013 that we would see these price levels. And it took some time. We got up here to the 102s, which was one of my lower end objectives, 102, 104, and then 107. 105 was in there, but I said if we got above 104, it would probably really reach for 107. If there's ever been any reason to expect that, it would be in the Star Spangled Banner presidency of Donald Trump right now, because say what you want to say about him, the collusion stuff, I think, has been swept under the rug now. It's a problem for Democrats. They don't have anything to go on, but his delivery on certain things economically have stimulated. So that may be what we're seeing here now that we're out of the woods with the whole Russia collusion thing. It's not going to go away, obviously, because the Democrats are going to keep that in the mind of everyone because of the 2020 elections. But the macro view of what may be occurring here, think about it like this. This is a weekly chart, okay? So if we looked at these equal lows here and say this was an Asian range. Okay, say all this price action was inside the scope of a daily range, okay, or 1 day's data. Say this was Asian range, and then we had a run higher. Then we consolidated, and then New York came down, cleared the equal lows, and I'm probably scrambling a lot of the new traders' minds right now. Why are you talking about intraday when you're looking at a weekly chart? It's all fractal. So I'm trying to give you a perspective that I'm thinking that may be unfolding from a higher time frame view. Equal lows in here, liquidity, they came down, ran them out, and now we're back inside above the lows. So this may be pretty much like an Artemis long, because this is the range here and the high here. So if we looked at that in the scope of, here's our low and high, we're right in that 62% level where Artemis would be. So yeah, we missed a long-term entry here, but who cares? We would be looking for a run above here, or just slightly before it, and all that still points to, the likelihood of running back above 100. Not just simply in here, this volume imbalance, or this SIBI, sell side imbalance, buy side inefficiency, which again, I think that's going to be the higher probability objective. We may get up there and then say, okay, it's going lower. Be mindful of that. But I'm saying if we have a sustained, prolonged move in the dollar, this could have been and couldn't be right now the handwriting on the wall that from a long-term perspective, dollar may be going up for a while. So again, I'm not pressing it hard for you to say, okay, this is my analysis. This is how I'm going to stick to it. Obviously, I don't always talk about long-term perspectives, but it's something I did back in 2013 and mentioned that we would be in 102s and 104s and as high as 107s, long term. And it didn't get there until 2016 or 17. What is that date? Yeah, 2017. We were trading up in there at the high. So about 4 years almost to get that objective. So it's not like day trading. So I just wanted you to think about it. Okay, and again, I'm not trying to sell anything hard. I'm not trying to force a perspective. But it certainly looks like we want to get above these equal highs. How we trade there and what we do once we get there obviously is meaningful in how we interpret price. And I'll talk more about it as we get there. But right now, it doesn't appear that it's a run up, the sweep equal highs and then sell off. I don't see that. If we're going up there, we're going up there to go higher, not just to clear these out. That's my personal opinion at the moment. The way charts are showing me price structure now, that's my interpretation of it. It may change if we trade. And again, that's a big if. If we trade up there, how we trade there is important. If we go through there with a big run, a huge candle, and that was how it gets there, not slowly creeping through smaller candles, and then trade above it, and then come back and start to run again. That's all accumulation and very efficiently delivered. Versus like a big run up, like something like this, where this is inefficient. All stretched out, big candles, and then it has to come back in, filling in. And then it doesn't even just stop at the closure of that void. It just rolls even deeper. Closes this in, runs up a little bit more, and trades lower. This is an inefficient decline. This is a meaningful turn. Inefficient, comes back down, rallies efficiently. Efficient, inefficient on the downside, fills it back in, and then runs for external range liquidity. So these are all things that I look at, and trust me, I say all that because I'm showing you what I mean, not so much the examples of what may happen here, because I don't want to give scenarios. I hate when people say, well, if it does this, I'm going to do that. If it does this, I'm going to do that. I don't like that. Right now, the narrative is it wants to clear these equal highs. So I'm throwing in the towel on near-term bearishness for the election of these equal highs being ran out. And I'm comfortable with being wrong because it's fine. It's all part of the business. But because of the way we traded, and I'll show you what I mean by that. No matter if we looked at the AVA demo, or if we look at the dollar index cash, or if we look at the dollar index futures contract, institutional order flow is giving every indication that it's bullish. Okay, we have down closed candles here that moved inside of this range here. Did they buy off of that? Yes, and price rallied up. Price went down to this level here. Was there any significant rally from that? Yes, they were buying off of that. Price came down right into this old order block, swept this low, reclaimed order block. We have a rejection block, which is the lowest close down here. We swept through that. Or you can simply refer to it as a turtle soup. Price runs through. Optimal trade entry regardless. High to low. Right in here you can be a buyer. It's supporting that. Down close candle. We see price trading down into it here with this down close candle on March 25th. So we traded into the order block here. Did it have a response after that to the upside? Yes. Was it powerful? Very meaningful, yeah. Created a higher high and also traded outside of the order block itself. The next day we open, trade down into the range, close into the order block that was created here. Down close candle. The high is 96.17. This low here should be 96.17. And that's exactly what you got, 96.17. So it doesn't matter that all of the details are not going to match up. The things that we look for do match up. Okay, the precision's still there for higher time frame order flow. There's going to be some discrepancies again. You're going to see some variances between what your live account would show, okay, which, again, I'm reminding you all, you're not supposed to be trading live funds while you're in the mentorship. And some of you don't want to listen. You're just greedy. You're action hounds. You want to get in here and gamble because you think you know something after watching a couple months worth of videos. Don't do that. You're not even following the instructions of the mentorship because you're supposed to go through the mentorship 12 months core content. Then after knowing all that stuff, minimum 6 months demo. Hard, disciplined approach to doing the things that you learned. Then and only then, if you're consistent, then dabble at your own discretion and deciding and timing. That's what you want to do with live funds, then, whatever, be my guest. You've done so on your own. I haven't told you to do that. But there's no reason for you to be worrying about the differences between what one chart or one broker shows. It's still going to say the same stuff because it's there. Okay, it's there. And I don't know how to describe it or put your concerns at ease any more than I just have tried here. Okay, so that's that. What changes it? What breaks this down on my near-term bullishness on the dollar attacking these equal highs? What would change that? And again, this is not plan B. It's just this what would tell me, okay, I have to stand at the sidelines and then wait for more information. We go down below the order block here. So if we trade below the low of 95, we'll just say 95.90. As long as we're above that candle, that down close candle, that bullish order block, as long as we're above it, we're looking for these equal highs to be taken out. Okay, so right now, the short form analysis, and again, I'll teach in April the contrast and differences between long form analysis and short form analysis. Short form analysis is what I'm basically giving you on a week by week basis. My short form analysis is near term bullish on the dollar, and the catalyst that changes that is we go below March 25th's low. After that, then we're going to be looking for this area here on the downside for the dollar. Otherwise, we're looking higher prices from here. Disregard the seasonal tendency. Moving on to the euro. Euro is a weekly chart. It looks like we're finally going to maybe make a run to that BISI, buy side imbalance, sell side inefficiency. So that's our objective, looking for downside. The high is 110.21, so we're going to say 110.25, 110.30, rounded to the nearest 0 or 5 level. And again, obviously, if it goes down, it might get accelerated and some capitulation may kick in because we've been in really, really tight weekly ranges. It's been a while since we've seen large weekly ranges. So we're due for it. And if we get this upside run on dollar on large ranges, that'll free up the volatility squeeze that's been on euro dollar, and it'll just start to accelerate. If we get through this down close candle, we have a buy side imbalance here. So in other words, all of this gapping in here, okay, there's no real candles in this area here, but I'm really defining it from this low here and this high here. Why that? because downside delivery is offered here. All of this is buy side. And then we have the open here. We trade down. Sell side was offered, but then they left this gap in here. Sell side was offered to this price point here. So this low is lower than this low. So buy side imbalance has an inefficiency on the sell side between this candle's low and this candle's high. So the imbalance of buy side delivery and the inefficiency of sell side delivery is defined by this down close candle's high and this candle here, it's low, because it's a gap. Buy side's been offered here, but no real significant downside. So I'm looking for, in this area, I want to see some candles come down, the bodies of the candles, trade into this close here at 107.23. Now again, that's a lot of a range between where we are currently, but it's something to consider. You have to have it as a, if we're looking at a weekly chart, what's the purpose of looking at a weekly chart if there's no reason to draw assumptions about where price may reach for? So the context near term is short form analysis points to the imbalance here. So we have a BISI here, buy side imbalance, sell side inefficiency. So we'll be looking for that. And again, as a reminder, the high is 110.21. So again, it's 110.25, 110.30 downside objective. Moving on over to the daily chart. We've been in this really, really long consolidation on euro, and it may be time for this thing to just finally give up the ghost and go lower and break out of that. Even if it comes out of this range and does the range high, the range low, that much of a displacement lower, in other words, like a measured move from high to low, and it repeats that same measure of, and I'll show you what I mean by that, probably be beneficial to see that. If we have the high here, I'm going to put the 50% level, which is right here. Just keep your eye on this level right here. I need some more range. If I drag that down to the low, right there, that's the range from high to low, and then duplicating that would put us down to here, which also takes us into that volume imbalance on the weekly chart. And I'll show you again real quick. See, it takes us right down in there, and interestingly enough, it would close this little portion of the gap. So again, it's something to consider. It's not a hard sell on me, trying to make you believe it or anything like that. It's something that I'm watching myself, and it may be more meaningful later on should we get some, drop down in here in euro dollar. And moving on over to cable. This video is a little bit longer than I wanted it to be. We have a volume imbalance here. No real bodies in here, even though we have wicks. There's a volume imbalance right in here, so that may be an area to watch near term. The high is 128.98, so we're just going to say 129 big figure. I'm comfortable with that, so we'll just do 129 big figure. It's good enough for government work. We'll expect it to trade down to that. Really nice run up into the range from Thursday. This is how I use the order flow that I gathered from the breaker on Wednesday, unfolding on Thursday. Equal highs, running up. I was showing you in the chart every time we were getting new buying opportunities and expanding up into this area right in here. Okay, right in there. There was a breaker in here on a 1 minute chart. Buying it in here, you could be a buyer, just scalp, it's all it is. Buying it here with the expectation of running the equal highs. And maybe you could have got out above here. Initially, I wanted to see it run above there, but this is where my attention was. Price, I got out as it slammed into the 130, 120 on a limit. You guys see that on the Twitter feed, on the recording. And then as price dropped down, right in here, so you can see all of the breaker, then we have another breaker, retrades back to it, spends a little bit of time around that breaker, finally releases to the downside, and then you watch that limit order get filled on this run down in here. It's not my job or my goal to show all of the potential range that's available, because obviously that's beyond the scope of Twitter. Because in mentorship, you'd always leave a little piece on to see what kind of a run you can get. And even if you just have one mini on to get down in here. That would have been a nice run. But this is a 1 minute chart, so don't want to spend too much emphasis and time talking about it. But this was the 5 minute breaker in equal highs I was looking at. Study that, and price broke down below it and then hung around in here, and then finally broke away. Interesting down close candle, which was bullish before, mitigation now, right in here. An extreme run below equal lows, relative, but equal lows, liquidity runs below it. The low here, big figure, 130, 137, and the low is 129.77. So about 30 pips, handsomely handled in terms of delivery. Price came back up in here and then moved into consolidation. So we'll see if it wants to have a run above these equal highs, because there's a little bit of a gap in here. They can punch that in here on Sunday, and then maybe sell off from that price point there. It's not necessary. I'd like to see it leave it there, not even close it in, because it's not imperative. But we do have some relative equal highs in here. And yes, it's a 5 minute chart, but nonetheless, I'd like to see it keep this price structure in place and just roll lower, maybe gap lower and then come back up and then fill it and have a catapult. So that's what I'm looking for going into this week. I will give you guys a review on Monday's activity, since it's a non-farm payroll week. So there will be a video Monday night, and I'll do a little bit better job of filling in anything I didn't get to here, because admittedly my brain's a little bit scattered because of our pet. So until I talk to you on Monday, have yourself a pleasant weekend.